Some Dubai real estate developers throw around marketing phrases like guaranteed returns or zero interest. But do those actually exist? Let's evaluate the claims using facts and real market data. Starting with guaranteed returns. Guaranteed returns. This term normally means two things. The first is buyback plan. This means the developer promises to buy the property back from you after 8 to 10 years, often at the original price or higher. The second promise is a rental guarantee, and this basically means that the developer will rent the property out for you and generate a decent rental yield. Usually they advertise 8 or 10%. This sounds too good to be true, right? Let's check what investors normally make from rent in Dubai. Typically, gross rental yields in Dubai range between 5 and 7%, depending on the location and property type. But the gross yield doesn't go straight to you. Once you subtract service charges, maintenance, vacancy losses, your net yield is often just 4 to 5%. Here's a simple example. Take a one-bedroom apartment in GVC priced at $270,000 US. You could rent it out for around $19,000 US per year. That's 7% gross, which is fine. But let's say it's 800 square feet, and you're paying $5 per square foot in service charges. That's 3.3 thousand annually, straight off your rental income. So your actual net yield becomes 5.8%. That's alright, but nothing close to 8 to 10% guaranteed yields advertised. So here's a logical question. If the real market isn't hitting 8 to 10%, how can the developer afford to guarantee that? To pull that off, the developer would have to rent out your unit at a higher than market rates, because they still have to take a cut, of course. So the real gross return needs to be 10 to 12% or more just to sustain this model. So here's the truth. The contracts that guarantee them are usually full of hidden risks. Let's check out the real booking form. This developer was offering both the buyback plan and the rental income guarantee. 10% net rental returns over 5 years. And this is exactly where the traps are. The first is that net income doesn't mean what you think it means. These returns often ignore the real costs of owning and renting out a property. The ones we just discussed, like service charges, maintenance, and management fees. So often your actual return is a lot lower than what was promised, because the contract sometimes doesn't define what net includes. The second trap to look out for is overpricing. Many guaranteed returns units are sold at a premium, sometimes 20% more than similar options nearby. So what's really happening is that the developer is charging you extra upfront, then paying part of the money back to you as guaranteed returns. They're not losing anything. Instead, you're just getting your own money back. Slowly. Third, watch out for buyback promises with no substance. Even if it's mentioned in the brochure reservation form, it often doesn't appear in the actual sales and purchase agreement. And even if it's mentioned in the SPA, it usually knows that it isn't guaranteed. You might see small print disclaimers like subject to market conditions or buyback optional, which means that developers can actually cancel buyback at any time or decide they'll pay you a smaller sum. And unfortunately, not reading through the contracts can be a huge problem. We've seen this happen firsthand. Before working with us, one of our clients had this exact experience. This customer has already paid for a unit from a developer offering a guaranteed return. But then she read her SPA in detail. To her surprise, the contract clearly said that the developer is not legally obligated to pay the guaranteed income. The buyback clause was optional, and all guarantees depended on various vague conditions. But she already committed her money and couldn't back out easily. We could have helped to avoid this, but it was too late. So for those who need an independent opinion on whether you should invest in a certain opportunity or not, reach out to us before you sign anything. If you don't already know, I own a real estate advisory and brokerage firm that guides affluent and high-net-worth individuals through the entire process of investing in Dubai. First, we create a shortlist of properties that are best for your goals. Second, we use real market data to help you prioritize one. Third, we get you the best possible unit. And finally, rent it out or sell it for you. You can message us on WhatsApp, scan the QR, or click the link below to organize a free consultation. So, we've seen how the promised guaranteed returns can fall apart on a closer look. So now let's dive into another deal you might see advertised. 1% monthly payment plans. Some developers in Dubai offer interest-free post-handover payment plans, where you pay 1% of property price per month for several years. And at first glance, that sounds like an amazing deal, but in reality, it's often not. I'll show you how this works behind the scenes with a real example of a project that was sold with one of the plans. We'll call it Project A. The plan was a 40% upfront payment with a 4% DLD and admin fee, and then in 5 years, the remaining 60% is paid at 1% per month, with no direct interest and no additional fees. And all of that might sound incredibly generous, but it was not, because now let's compare that with Project B. It's in the same area, with similar amenities, and of similar unit size. The key difference is that Project B has a standard payment plan and a much lower price per square foot. Project A costs $440 per square foot, but Project B was at just $330 per square foot. You know what it means? Let me elaborate. Say you're buying a one-bed apartment in Project A for $350,000 and we know that units in Project A are around 25% more expensive than in Project B. So the market price, without fancy payment plans, is $260,000. But for Project A you pay 40% upfront, which comes to $140,000, and the remaining 60%, which was $210,000 over 60 months. That's $3,500 per month, and that $3,500 monthly repayment means you're effectively borrowing $210,000 and repaying it at an interest rate of more than 25% per year, because you paid $90,000 more than the market price. So it's not really interest-free, you're just paying the interest in the form of a higher property price. And we can see the same pattern across areas and developers. In GVC, one project with a post-handover payment plan is priced at $500 per square foot, but right across the street, Bengadi offers a similar unit for just $380, with a standard 70/30 plan and comparable quality. Next, Dubai Silicon Oasis. There is a 1% plan project going for $490, but nearby Ellington Hillgate, which is far more premium, is priced at just $450. Same in GLT and many other communities. The 1% payment plan ends up being 25 to 35% more expensive. However, there is a way to convert a big share of the property price into small installments with paying much less than 20% annual interest. And the best part is that this flexibility is available for thousands of off-plan properties in Dubai. I'm talking about mortgage. Mortgage in Dubai is available almost exclusively for ready properties. So here's what you should do. First, you need to choose a project with a back-loaded payment plan. This just means paying 50 to 60% during construction, with 40 to 50% due at handover. Doing this scheme with 80-20 payment plans won't make much investment sense. The second step is getting pre-approved for a mortgage on a handover payment. When the handover comes in 2 or 3 years, instead of making the final payment with your own money, you simply borrow money from the bank. For example, if the property is worth $270,000 and you've already paid $160,000, you can mortgage the remaining $110,000. And because this is a traditional bank mortgage, you can stretch it out over up to 25 years, with interest rates currently in the range of 4 to 7%, depending on your case. It's all up to you which payment scheme you want to go with. But my point is that instead of paying $3,500 per month with 25% interest over 5 years, you could use a mortgage and pay $600 monthly with 4.5% over 25 years. And this is low enough to fully cover the rent. There are nuances, of course, so we connect our clients with trusted mortgage advisors who help to get a sense of what is possible in your case and guide you through the whole mortgage process. So if this is something you might be interested in, don't hesitate to drop us a message. And if you want to get a sense of what kind of advice you can get if you work with us, check out the video where I share how I'd invest different budgets in Dubai real estate.